Back, everyone. It's middays from the Element Wealth Studio. It's our pleasure to welcome now Jim Leggette, lecturer of economics at Mississippi State University. Hey, Jim.
Morning, Gerard. I was just listening to your bump music from Dire Straits, and I go, well, now I know why no one likes economics, because that world doesn't work. Money for nothing, chicks for free.
Money, that's right. I love it. Oh, that's awesome. So, first, what do you think? Yeah, I hear you, man. So the Fed, no shock there. They cut the benchmark rate by 1/4 point. I know there was some that thought, well, maybe they'll see fit to chop it by 1/2 point, but I think largely the market had already baked in 1/4 point. But then yesterday, and I don't know if it's because of that action or not, but all 4 indexes hit record highs. It was a good day. Yeah.
Yeah, I think good day, and I guess when you back up from this, I think one of the hardest jobs in the world, maybe even harder than the president's, is being Fed chair, because you're forced to navigate between 2 conflicting goals: stable prices and low unemployment. And if you move slightly to one way, you give up the other. So I think it was the right move. Besides, you're always going to be wrong, because everybody knows 2020 hindsight. I think it's the right way, and I think inflation, we kind of got it under control, but not really. And then there are enough dark clouds on the horizon. I wouldn't say money for nothing and chicks for free either.
A lot of concerns about the job market, Jim. What do you think about the latest data there? To the extent we can rely on it, of course.
Yeah, well, and I don't. Well, I'm concerned about the true up, which they go through all the time. It seems to be bigger than it has before, but I think there are some signs that point to it's not as robust as we think it is, and those clouds of uncertainty are kind of still out there. We easily lose track of the idea. We're at 4.3% unemployment, and there was a time we would have erected a gold statue to whoever happened to be the Fed chair.
That's absolutely right. Yeah. 10%, right, when Obama took office, as I recall, after the banking meltdown in the fall of 2008.
Yeah, and it took forever to get it down to something that you could argue whether the Fed was right, but I think when you have financial crisis, and it took Reagan a long time to get it down to 5, and then when he did, it was happy days are here. What was the old ad? It's Morning in America.
Morning in America. That's right. Yep, Morning in America for his reelection. Yeah.
And that was a masterpiece of political craft.
No, man, was it ever? I mean, and he was really good at just projecting optimism and thoughts and feelings of positivity. He was really good at that. It seems like we're at each other's throats every day now in our political discourse. Hopefully that'll change.
I think it will. I think we go, listen to those clips you had, and I said, you know what, I'm going to do something easy like economics. But I think what's kind of missing, and maybe it's a rare person that did this, but I'm thinking like we have national tragedies all the time. Charlie Kirk one is just a series of those. But you think of the beautiful words he delivered after the Challenger thing, and of course he had a very good speech writer, Peggy Noonan, but he also knew how to deliver, because I couldn't deliver like that.
She was unbelievable at it, no doubt, and I don't think he's been equaled since then, for sure. All right, so there's still concerns about the labor market, and of course, the Feds, as you know, they're in a bit of a conundrum when you look at their dual mandate. They got inflation still not where they wanted to, but they got a weakening job market, and of course, typically their action to a job market that seems to be on the straits, it would be to lower rates, thinking that would stimulate capital investment and just business expansion and thus jobs. But so they're kind of torn between those two dynamics.
Yeah, and in fact, that Congress set them up like that is kind of interesting. The EU, that probably is a good counterpart. They only have one mission: stable prices.
Yeah.
low inflation.
Okay.
And I think that
Talking about their central
goes
bank,
back,
the central bank, Jim? The central bank of the
yeah,
EU only has
EU central bank.
one mandate.
Yeah.
Yep. Okay.
And I think that goes back to they saw what happened in Germany in the 20s.
Yeah.
And of course, particularly the Germans said, oh, we ain't doing that again. And
Yeah, exactly.
I think seared in our collective memory, the 25% unemployment in the Great Depression. And then the way I kind of teach it, before kids sit in the front row, okay, that means one of you doesn't have a job. And, we really nearly tore ourselves apart over 10.
That's right. You're exactly right. And that's a little different scenario. And then I think the Fed still expresses concerns about the impact of tariffs, believing that that's not fully matriculated throughout the economy. What do you think? I tend to agree with that. I don't think we've seen it all yet. There are a lot of reports I'm seeing, Jim, that say right now the American importers who pay the tariffs are, for the most part, absorbing the lion's share of those, and then the foreign exporters are absorbing a quarter or so, and a small, less than 10% is being pushed down to the consumers.
And that's my read of it, too, because I think one problem is, I think, as you pointed out, that they're not really sure what's going on. So let's see if we can hold on for a while, because I think the Supreme Court's going to decide the legality of it. But we know you can't eat those costs forever. And then also the other problem is you don't even know what the rate is one day. One of the things the way I like to think about policy, I can deal with bad policy. I can't really deal with uncertain policy.
Right. Absolutely.
And I think
I think
that's what
I was just going to say, in business, my take on it as a business person making business decisions, I say all the time, it's faith, confidence, and certainty. That's what you need to make those decisions. Yeah. And we don't have that. You tend to just sit tight and sort of freeze and pause and just wait for the dust to settle before you make those critical decisions. I think that's fairly accurate across our economy.
And in fact, my wife's a real estate broker, and what she's observed, we're all about the same age, but what she's observed in the many years that she's been in that business, during elections, presidential elections, which are a period of uncertainty, because you don't know who's going to be in control, people hold back on making those major decisions. So I raise that not just to champion her, but her insights, which is always a good thing, right? But if you and I are holding off on the decision, what if you're the chairman of, let's say, pick your favorite company, and you're figuring out what to do with a $5 billion decision, and if you get it wrong,
dollars. Yeah, that's right. It's major dollars. So one thing that I caught, I'm sure you did too, just in listening to Chairman Powell when he was talking about GDP growth, and he estimated 1.6% for the year, but halfway into the year we're at 3%. So is he expecting a significant decline for the remainder of the year? What's going on there?
Well, we got one quarter that was about zero because they basically choked off the export sector. I think, but why he's citing that, I think it's more support of why he lowered the rates is if GDP is slowing down, that means jobs are slowing down, and people often forget it's GDP first, then jobs. Because you were a good enough businessman to know you didn't hire people before you had revenue, right?
Heck yeah. You sometimes would take that risk, but you know it's hard to sleep at night, honestly, while you're going through that period.
Living in your house.
Yeah, exactly. That's exactly right. Well, I was just surprised. That's exactly right. I was just surprised that he projected, and then 1.5 next year and 1.7 for 27. I think that was his outlook. But the White House is saying, White House is saying, no. In fact, Kevin Hassett said it the other day. He said, I think we can get to between 3% and 4%, maybe even higher than that, based on the regulatory form tax environment. What do you think?
Well, I really hope he's right, but no one's been able to do that for quite a while. Now, what's interesting about the math is, until about mid-2000s, we were bumping along at 3% growth for a long time.
Yeah.
And you know how compounding works.
Oh yeah.
It took the average. I mean, like a $16,000 per capita income to like a 50.
Yeah.
And if you get to 2, it's like, yeah.
Yeah, exactly. That's exactly right. Jim, always enjoyed talking to you. Appreciate you joining us today. Thanks a lot, man.
All right, you guys have a good weekend and enjoy some football.
Yeah, you got it. Jim Leggette, Lecturer of Economics, Mississippi State.